Hey guys, how are you all doing? So Dan from Trading with Dan here, and this is our gold and silver miners update along with the actual gold price, the silver price, gold silver ratio, and some of the ETFs. So let's go over to those charts. Yeah, firstly I just want to show you guys the gold trade we had on based on this 4-hour 9. This candle was actually a 9 and then printed as a red one when we closed lower. Well, when we traded lower, closed lower here, but what we actually have, we drew this line in yesterday or the day before, can't remember when it was, but it's either yesterday or the day before. If you want to check back the videos, I'm not making this up. But yeah, what we had was our first target, if we broke under this line, was the 200 period on the 4-hour, and then our second target was just round about roughly where this this sort of horizontal level was. So yeah, those great targets both met and exceeded. So yeah, that was a great trade idea from the other day. Silver, let's have a look at silver. Silver again, similar great trade idea. First target was obviously that moving average, and obviously you guys know my second target would have been this moving average. So we're looking at some 4-hour 9s coming up on silver and gold here. Obviously we're on an 8 there and a 7 there. Gold silver ratio, not that we trade this, but I do like to keep an eye on this. As you can see, we're sort of in the zone here. So breaking above here, did we have something on? Did we have a daily line on here that we were considering? It's just slowed down for a little bit. No, we didn't. Or did we have a 12-hour? Yeah, so here it was. This is what our trade was based on. This 12-hour 9 here. So we had a break above it, upwards, break below it, continuation downwards. So that's what we're looking at there. Another thing I want to bring your guys' attention to that we haven't discussed. I don't know what sort of how in detail you guys look at the gold price, but what we have with gold is an asset that responds most closely to real yields. So as real yields go up, gold goes down. As real yields go down, gold goes up. So I actually have this 10-year yield. I always watch a 10-year yield. It's one of the mainstays of my market monitoring. Is that this is a 10-year yield just here, guys. If you can see, it's always there on my screen. I always have to be able to see it, and you can see I always have to see where all the price action is in the past as well. That's the S&P above it. But the 10-year is the most important. So what we have got going on here on the 10-year is basically a rally up. So that is an increase in real yields, which is this here. This here is what is pushing down gold right now. This here is not gold pushing this up, pushing these yields up. This is actually these yields pushing up, which is pushing gold down. This is the bond market. This is the biggest market out there, the biggest by far. It is exponents larger than the stock market. And this is the more professionally traded market. So yeah, incidentally, the bond market was where I first started trading for a company back 12 years ago. So yeah, I do have a background in bonds. I mean, maybe that's why I watch it so much, but it's more so because I know its importance. So anyway, so yeah, you can see we've actually got a 12-hour 9, a 4-hour 9 here. So we could be seeing a bit of a move down in this 10-year. So we'll just sort of put the sell level across here and put the arrow down. So I've got bonds, how bonds are priced. This is the yield on the bond, and this is the yield going up. So that actually means the price of the bond is going down. So this is basically a sell-off in the bond market, which is the bond price going down, which is in effect pushing the yield, because it is the yield is inversely correlated to the price inversely correlated to the yield. So I'll expect a pull down in here, which will coincide with if we do get a pull down, if we break it down below this level and come back a bit, even a bit or all of it or whichever, however we move, that downwards move will correspond with an upwards movement in gold, basically. So this is the main one to keep an eye on. If we do break below here on this 9, I think we'll start moving. Obviously gold has its own potential 4-hour 9 coming in, but this is quite a long wick on this candle. So if we don't go lower, we stay around here. I mean, you could quite safely say a break of the 7 candle will potentially be a buy, but we will wait for the 9 anyway. We won't start drawing things on 7 candles. I mean, 8 candles or 9 candles before they close at a push, but we were not going to draw on 7 candles on 7 red 7s. So yeah, so right, we've done that. We've talked about the 10-year yield. So that's some useful information, guys, that you should always pay attention to. Also, 10-year yield does relate to stocks as well. So as the 10-year yield goes up like this, this is basically an increase of usually risk assets, as it means money is coming out of the bond market because the bond market is selling off. Money is coming out of it. That is what is driving the yields up, the inverse correlation, remember. So that risk premium, that money coming out of bonds and into riskier assets, i.e. stocks, is what drives them up. So what you have is an inverse relationship between the yield and gold, the 10-year yield and gold, and then you have basically a correlated relationship between where stocks go and where bonds go. And often the bond market will telegraph where stocks are going to go. If the bond market starts to rally, this yield starts to come down. Often stocks will follow either at the same time or after, and then obviously the opposite when it goes up. Right, anyway, so a bond lesson over. So the GDX. So yeah, we had our fake up above there, and now we're actually trading below here. So we're potentially expecting a move down to possibly the 200. GDXJ. GDXJ is looking a bit stronger here, but yeah, holding up this nice trend line, and we'll draw this on. This is a very nice looking trend line. Possibly draw it from here. Just look at that, it's beautiful, isn't it? But yeah, looking like we could potentially break it if we break it, if we come lower. So that could be of importance, so we'll have to keep an eye on that. Again, potentially forming what's it called? If we do rally from here, potentially forming an ascending triangle, and I do like ascending triangles. We've got anything on the daily here? Not much on the daily or the 2-day or the 5-day. Nothing really TD count. We sort of, oh, actually on the 5-day we do. 5-day we have a 9 here actually on the 5-day, and maybe we get one on the weekly, and we have one today on the weekly as well. So we are possibly seeing a bit of a sell-off coming in gold. Well, yeah, a bit of a sell-off possibly. It will be. Yeah, I mean, if obviously the 10-year yield continues to rally, we'll definitely see one. But I do see it turning round, so maybe this is a bit punchy. Maybe this is a weekly time frame, remember, so we can get more volatility around here and then just carrying upwards, not necessarily reverse the price. So the spot gold miners ETF very nearly got that 9 there, the sell 9, but we started to come off a little bit beforehand. I mean, easy trade here. Easy trade, just buy when we break above the high again. So there we go. Easy trade to make, buy if we break above here. Oh, there we go. But downside, we'll just have to see where it plays out. The spot juniors. Oh, did we draw this on? Did we draw this on yesterday? Oh, sorry, we're on a weekly, of course. Right, we're on a weekly. Did I draw this on a weekly as well? I must have done. So let's look at it on like a daily and a 12-hour. Yeah, so daily nothing really count wise, but yeah, I mean, that is still a level we'd obviously look to buy. 4-hour, do we have anything interesting? No, not much on the 4-hour, so we'll skip go AU today over to silver miners ETF. Yeah, again, well, trend line that we possibly broken through the bottom here, so we'll draw this on, and then we'll keep an eye on this, because this could signal more downside. So yeah, let's put that on. It could signal more downside. So yeah, we are potentially looking at a bit of a move down here. These are obviously equity. Oh well, sort of equities ETF. They're obviously equities. The silver miners are. So I mean, if we are potentially looking at a sell-off in some of the stock markets, we could very much expect a sell-off in these equities also. Let's have a look at the largest royalty and streamer, wheat and precious metals. Again, you can see we're actually dropping out of a nice trend line here, and what looks like a sort of squashed head and shoulders. So this, I mean, we're potentially at the break level. I mean, this is it really. If we want to put a line across here, which we are currently below at the moment, not close to 4-hour candle below, but yeah, we could look for a projected move from basically the height of the formation. So that there, and let me move this down to basically down to here. We'll put it here. So, that is actually straight down to the 200 on the 4-hour, so that is some nice confluence there. But yeah, potentially a target of there. before we get a bounce. Anyway, let's have a look at the daily. Obviously it would be nice to get some get back in some cheap gold stocks before we go to the moon. But yeah, so interesting times in this gold. We could be looking for a bit of a retrace, and yeah, potentially then a good buying opportunity. We'll have to see. Again here, look, if we drop out of here, we've already drawn this one on, we drop out of there, potential sell trade, and we're obviously getting close to it, some wonky line somewhere there. Let's have a look at First Majestic. So we had our 9 sell. Yeah, basically we should have had the this is on the 4 hour, very obvious trade breaking below here, but it gapped down obviously from yesterday's close to this morning. So yeah, but yeah, very nice trade there. So I would expect this to potentially come down to the 200. I mean, I can't really draw it much on now we obviously missed the timing of that. Yeah, again we had this line drawn to break above basically this horizontal to then get continuation, but obviously we broke above it, then came back down, and we're now operating underneath it, but we're actually on the 200 daily, so this is a quite clear level to buy. Quite a clear level people do buy, but maybe we are going to come down or stay down here a little bit until the 21 starts to guide us back up again and breaks us through. Potentially have to draw this line here, which is at the risk line actually, you can see here. So yeah, some confluence there. Let's have a look at Fortuna. Yeah, on the brink here, obviously breaking below and coming down on the daily. Was this based on a 4 hour candle, or was it just, yeah, it was loosely based off, it's more just based off the horizontal, wasn't it? We obviously had this 9 here which breaking above clearly got us the up trade. That obviously wasn't drawn on beforehand, but yeah, so potential move down we got going on here. So anyway, yeah, that is the end of the video. Sorry if I went on a bit longer than normal about obviously bond yields and how they pertain to gold prices, but it's definitely something that is worth knowing anyway, at least. So yeah, so thanks for listening, guys. This is not financial advice. I'm not a financial advisor, so always do your own research. And yeah, I mean, maybe we're looking for a bit of more of a correction in these precious metals, maybe, and if we are, maybe some good buying opportunities there. So remember, not financial advice though. Right, I will speak to you guys later.